The Governing Council will stay the course in raising interest rates significantly, at a steady pace, and in keeping them at levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium-term target. Accordingly, the Governing Council today decided to raise the 3 key ECB interest rates by 50 basis points, and we expect to raise them further. In view of the underlying inflation pressures, we intend to raise interest rates by another 50 basis points at our next monetary policy meeting in March, and we will then evaluate. According to Eurostat's preliminary flash estimate, the euro area economy grew by 0.1% in the fourth quarter of 2022. While above the December Eurosystem staff projections, this outcome means that economic activity has slowed markedly since mid-22, and we expect it to stay weak in the near term. Rising wages and the recent decline in energy price inflation are also set to ease the loss of purchasing power that many people have experienced owing to high inflation. This, in turn, will support consumption and in a concerted manner. Any such measures falling short of these principles are likely to drive up medium-term inflationary pressures, which would call for a stronger monetary policy response. Moreover, in line with the EU's economic governance framework, fiscal policies should be oriented towards making our economy more productive and gradually bringing down high public debt. Policies to enhance the euro area's supply capacity, especially in the energy sector, can help reduce price pressures in the medium term. Turning now to inflation. According to preliminary Eurostat's flash estimate, which has been calculated using Eurostat estimates for Germany, inflation was 8.5% in January. This would be 0.7 percentage point lower than the December figure, with the decline owing mainly to a renewed sharp drop in energy prices. Market-based indicators suggest that energy prices over the coming years will be significantly lower than expected at the time of our last meeting. Food price inflation. Government measures to compensate households for high energy prices will dampen inflation in 2023, but are expected to raise inflation once they expire. At the same time, the scale of some of these measures depends on the evolution of energy prices, and the expected contribution to inflation is particularly uncertain. At the same time, recent data on wage dynamics have been in line with the December Eurosystem staff projections. Most measures of longer-term inflation expectations currently stand at around 2%, but these warrant continued monitoring. However, the energy shock could fade away faster than anticipated, and euro area companies could adapt more quickly to the challenging international environment. This would support higher growth than currently expected. The risks to the inflation outlook have also become more balanced, especially in the near term. Domestic factors such as a persistent rise in inflation expectations above our target or higher than anticipated wage rises could drive inflation higher also over the medium term. On the downside, the recent fall in energy prices, if it persists, may slow inflation more rapidly than expected. This downward pressure the Governing Council will stay the course in raising interest rates significantly, at a steady pace, and in keeping them at levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium-term target. Accordingly, we today decided to raise the 3 key ECB interest rates by 50 basis points, and we expect to raise them further. Keeping interest rates at restrictive levels will over time reduce inflation by dampening demand and will also guard against the risk of persistent upward shift in inflation expectations. Moreover, from the beginning of March 2023, the APP portfolio will decline at a measured and predictable pace, as the Eurosystem will not reinvest all of the principal payments from maturing securities. Our future policy rate decisions will continue to be data dependent and determined meeting by meeting.